Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in corporate filings. Today we're diving into a treasure trove of information from the Hanover Insurance Group. Will we find gold or just a bunch of insurance paperwork? Let's find out. We will be looking at their recent report and press release and how the company is saying about its future. First up, let's establish what this document is. It's a Form 8K, also called a current report, filed with the Securities and Exchange Commission or SEC. Companies use these reports to announce major events that shareholders should know about. The date of this report is April 30, 2025, so everything we're looking at happened around that time. This report includes the company's results of operations, meaning how they're doing financially. There are a few disclaimers here. These are just standard checkboxes that the company needs to mark to indicate that they aren't using this form for certain specific purposes, like communicating directly about a merger. It's basically saying this isn't that kind of announcement, let's move to more interesting stuff. Okay, this part lists the securities or investments that the company has registered. You can see their common stock trades on the New York Stock Exchange under the ticker symbol THG. It also lists senior debentures, which are like bonds, also trading under THG. This is where things get interesting. Under item 2.02, the company is furnishing information on its financial results. This means they are providing the details, but it's important to note that this information isn't considered filed in the same way as some other documents. Filed has a specific legal meaning. In simple words, it's not as serious as when a document is filed, but it's still important information. The company released a press release and financial supplement that is furnished or provided as exhibits to this report. This is how they officially announced their financial results for the first quarter of 2025, which ended March 31. Now let's dig into the numbers. Here is the list of exhibits. Exhibit 99.1 is the press release and Exhibit 99.2 is the financial supplement. These will have more details on how the company performed. The report is signed by Jeffrey M. Farber, Executive Vice President and Chief Financial Officer. This means he's officially vouching for the accuracy of the information in the report. Let's see what this report is all about. Now let's dive into the press release. The headline announces the Hanover's first quarter results. A press release is basically an official statement to the public and investors about how the company is doing. Here are some key highlights from the first quarter of 2025. Net income was $143. Net income is the profit a company makes after all expenses are paid, and per share means how much profit each share of stock earned. This is a key measure for investors. A CAFE and per share means how much profit each share of stock earned. This is a key measure for investors. They also had net premiums written of $1.4 billion. This is the total amount of insurance premiums they wrote, meaning the amount of money people paid for their insurance policies. The company achieved a combined ratio of 94.1%. In the insurance world, this is a key number. It represents the sum of claims and expenses divided by earned premiums. A ratio below 100% means the company is making an underwriting profit, meaning they're earning more in premiums than they're paying out in claims and expenses. So 94.1% is a good sign. Book value per share was 75.10, up 4.2% since the end of last year. Book value is essentially the net asset value of a company. It's what would be left over for shareholders if the company sold all its assets and paid off all its debts. A higher book value generally means a stronger company. The fact that it's up since last year is a positive sign. According to the president and CEO, the first quarter was an excellent start to the year for the Hanover. He highlights strong underwriting results, solid investment income, and profitable growth. Let's jump to the financial supplement, which provides a lot more detail about the numbers. Net investment income came in at $74.2 million. This is income the company makes from its investments. Here we see a consolidated balance sheet. Let's hone in on a few highlights. Total investments are listed at around $76 billion. This is a large portion of their assets. Total shareholders' equity is about $27 billion. This is the value of the company that belongs to the shareholders. It's calculated as assets minus liabilities. Now, let's look at the income statement. This shows how the company made its money. Net premiums earned were $1.3 billion. Remember, this is how much they actually earned in premiums after accounting for things like policy cancellations. Net income was $143.4 million, just as we saw in the press release. These numbers match up, which is a good sign. Here we see the combined ratio we talked about earlier at 94.1%. We can also see the components of that ratio, such as the loss ratio, which is the percentage of premiums paid out in claims. The loss ratio is 62.7%. This is how much of the premiums they received went to paying claims. It is an important metric to look at the company's underwriting performance. The expense ratio is 31.4%. This is how much it costs to run the business, including salaries, marketing, and other expenses. The report also mentions reinsurance. It is insurance for insurance companies. This helps them manage their risk by passing some of it onto other companies. Reinsurance is basically the financial instrument that allows insurers to operate at larger scales. So what's the story here? The Hanover seems to be doing pretty well. Their net income is up, their combined ratio is healthy, and their book value is increasing. They're making money both from their insurance business and their investments. One potential risk is always the possibility of large claims due to natural disasters or other unexpected events. Insurance companies are always walking a tightrope between collecting premiums and paying out claims. Also, the insurance industry is very competitive. The Hanover needs to keep innovating and providing good service to stay ahead. Overall, based on these numbers, the Hanover appears to be in a solid position. They're profitable, they're growing, and they're managing their risk effectively. Of course, past performance is never a guarantee of future success, but these results are definitely encouraging. Thanks for watching. If you found this analysis helpful, please like, comment, and subscribe for more corporate deep dives. Let me know in the comments which company you'd like me to decode next.